as I mentioned earlier, I'm particularly thrilled today to have 2 Cal alum returning. And for the past couple of semesters, we've really looked hard to find speakers from some of the top venture capital and accelerator companies that are out there. And that's why I'm particularly pleased that Christine Tsai, over to my right, not to be confused, right here with Nav, is with us. She's the founding partner for 500 Startups. If you haven't heard of 500 Startups, I'm just not sure where you've been. They're one of the top accelerators in the world. I just saw that yesterday, I think it was, you started something, a global venture fund in Istanbul?
Yes.
Yep, that was kind of exciting. And also, Christine, as part of her work, is responsible for overseeing the accelerator program. In her pre-life, she actually was a cognitive psychology major at Cal. I hope that's right. I hope I'm saying that.
Cog-sci, yeah.
Oh, is that what it is, Cog-sci?
Yeah. Unless they've changed it.
You don't have to say the whole word anymore, okay. And graduated and then immediately went into more or less corporate life, working with Texaco, doing sales in Texaco, and then going on. And obviously some kind of startup bug must have hit you because you were at Google and YouTube as a product manager. So, and then in 2010, working on founding 500 Startups. And it seems that you were also an accomplished ballet dancer. So I feel like that's a good metaphor for probably what you're doing in terms of balancing everything you're doing at 500 Startups. And when I talked to Christine a couple of months ago, she was kind enough to kind of suggest that while it's interesting to speak with her, that it might be interesting to bring in one of the startups from 500 Startups. And thus, I'm also pleased to be hosting Nav Athwal. And Nav, also a Cal grad, has actually a law background. And I'm just curious, do we have any lawyers in the room? Thank goodness. Okay, then we'll be all set. I am married to a lawyer, but you know, how can you help but give a lawyer a hard time?
It's true.
Nav is actually the CEO and founder of RealtyShares. And RealtyShares, if you are not familiar with it, is more or less what, how can I say this in a good way? You're basically looking at accredited investors for real estate projects. And it is kind of like, and I'm looking for the lending club of real estate. And what's been interesting is that RealtyShares was only started in 2013, I think. And in that same year, I think that you all went into 500 Startups. And in that same year, it looks like you had a couple of investors. And just this past spring, you had 10 million from Menlo. So that's pretty incredible. And before that, not surprisingly, you worked for a larger law firm. And as part of that, doing real estate development deals, some of them perhaps you've heard of from companies like, let's just see, Airbnb and Pinterest. So that's been pretty interesting. And believe it or not, this is not just a lawyer we have next to us, but also an electronical engineer. The valedictorian of your class, as I understand it. I've already given him a hard time about being an overachiever, so hopefully we can come up with some pretty hard questions for him today as well. And in his spare time, he's blogging. So I want to welcome you both and want to let you know that we'll be peppering you with questions thanks to input from our students. We'll be taking a little bit of a step looking kind of through your journey to how you got to where you are. For both of you, talking about your industry and then some insights. And probably around 6:05, we'll be opening it up for questions. And gang, as you all know, at around that time, I'll also post the link for attendance at that time in the back here. So with that said, I will try to not have the spotlight too much on us. And let's see if I can do this or not. There we go. So both of you are Cal grads, and it's interesting to us here in the audience to hear a little bit about, Christine, maybe you can start. What was it about Cal that did or didn't prepare you for what you did right after you graduated and you know, perhaps some of the things that you're doing today?
Yeah, so I was at Cal a while ago. So I was class of 2002. I don't think this building existed back then. But how did it prepare me for what I'm doing now? I don't think it really did, and I don't mean that in a flippant way. It was just more that there were certain skills in terms of just the way that Cal is, where it's very different from a lot of other schools, especially private schools or smaller schools, where you have a lot more attention, a lot more resources. For me, and I'm sure it's the same now, at least as an undergrad, you're basically kind of thrown into a sea of a ton of other very talented, competitive people just like you. You obviously had to have been pretty high achieving to get in, but you're among all these other students, and you're again kind of competing for the same resources. So it's sort of like a sink or swim type of thing. So I think developing that sense of hustle is mainly what I took away from being here, as well as the network and having gone through kind of the rigor. It wasn't really so much what I learned. I don't even remember anything about cognitive science anymore. So it's really not so much what you're studying, at least in my opinion. It's more kind of what you get out of having to go through the classes, get from first year to last year and getting that degree, and just kind of being in an environment where it's really up to you to succeed. No one's going to come and pamper you. Professors aren't going to contact you. It's really up to you.
We had a speaker 2 weeks ago who talked about it's not like being a snowflake somewhere where you're taken care of. So interesting. You talked a little bit about networking and what kind of networks. Just curious, like what kind of networks did you make while you were here, or what was your networking?
I guess for me, my network has changed quite a bit since when I was at Cal. It was a while ago, and but I guess also being in tech, there's been a lot of people that have reconnected from that. But I think actually a lot of the people that I went to school with, like many of them have ended up either as engineers or in startups, and maybe that's sort of because people who stuck around in the area, there's obviously a lot of people who are interested in tech and working in that space, and we've just reconnected over the years. But
when you have different teams that you're looking at who are interested in getting into 500 startups, does it make a difference to you? Do you ever kind of look, is it intriguing when you see somebody who has a Cal background?
Oh yeah, definitely. Like every investor you talk to, everybody is biased. Like everybody, that, I don't know if it's a song or I forgot, it was from some musical, like everybody is a little racist, but, so not that, but, so everybody has some kind of bias, no matter what. Not that I would pick to a team to invest in just because they went to Cal, but it does kind of help fast track them if I see, oh, they're Cal grads, oh, okay. It was certainly the case for Nav. I was like, oh, it's, Cal grad, but that wasn't, it's just more that first step. But if they turn out to be a crappy company, then it doesn't matter. But it does certainly help, just because you sort of have an affinity for people who are in the network, or maybe there's some sort of similarity. But yeah, it does help.
So Nav, you started at Davis in engineering, and then decided that just wasn't enough for you.
Or I just wasn't that good at it. But we'll go with your version because it sounds better. I went to law school at Berkeley, and kind of playing off what Christine was saying, I think the network was really what I maintained. I enjoyed every class, and I learned a lot, some of which was applicable when I was a lawyer, some of which I threw out the window when I became a lawyer. But a funny story is my co-founder, who's no longer with the company, but was involved very early on, for RealtyShares, I actually met at Berkeley. I was a lawyer, and he was at the business school at Haas getting his MBA, and we took a class with a professor who sort of taught both sets of students. And we met there, both loved real estate, started talking shop, stayed in touch, and 3-4 years later started the company together. So, and then professors that I had at Berkeley are still involved, or advisors to the company. So I think the network, the people I met, the people I still stay in touch with today, both with respect to RealtyShares and just generally with respect to life itself, really is what I maintained and took away from Cal is the most value. Really like my time here.
So I think that over the last 10 years, if not 15 years, exponentially there's been this increased focus on entrepreneurship and certainly on innovation, I think. But I am kind of curious to hear from your perspective. I think that you all come back, how you've seen things change in terms of a focus on entrepreneurship. I don't know if you can speak to that or not.
You mean on campus?
Yeah.
Or?
Only because you have a kind of before or earlier perspective.
Yeah. So, when I was here, definitely there wasn't anything like around entrepreneurship, at least that I could tell. Now, it's only been more recently in the last year or so, there have been, from what I could gather, like a number of groups that are starting up for entrepreneurship. They're either associated with the university or they are student groups. They're not affiliated. I'm guessing there's courses like this that are around entrepreneurship. And it seems like there are a lot of different departments at Cal. Maybe it's a little bit fragmented, but there's, Haas has their own thing, engineering and et cetera. But it's pretty clear that, there already have been a lot of great founders that have come out of Cal, and it's not necessarily branded as such. So that's something that I think is a big opportunity for Cal to be able to say, oh, that's a Cal founder. You hear a lot of, oh, there's Stanford founders, or that's a team from Stanford. But for Cal, it's sort of like you find out after the fact that, oh, they happen to go to Berkeley, versus they're waving their flag that, oh, we're a Cal company. So I think that's something that is kind of a new, sort of a next step, I think, in evolution.
So just to follow up, what was it that when you were going through your career, your early days, the first decade basically, that all of a sudden led you to want to start 500 startups?
I mean, I was at Google for quite a long time. So I joined in 2003 and I left in 2010. And I had worked with a lot of startups while I was there, because a lot of companies were using our APIs, and I worked a lot on the developer side, so you ended up working with startups. And I think for me, I'd been at Google for a long time. I was always pretty interested in venture capital, but for me, I thought VC was something that was kind of down the road, or a lot of the conversations I had with people and in terms of developing relationships with VCs or whatnot was sort of like, there was a lot of, oh, well, I heard a lot of no's in terms of, well, venture capital is something you get into either as an associate first thing out of school, or later down the line when you've exited a company and have tons of money. Or, well, if you're going to be a woman in venture capital, you have to be really aggressive, i.e. you are not the typical, you'll never survive in the ruthless world of VC. But yeah, I mean, Dave McClure, who's my founding partner as well, we had met when I was at YouTube, had kind of kept in touch for a while. We did a lot of things together in terms of startup events, and he was starting to raise the first fund, and we had a conversation. I didn't really realize that's what he was doing. But I told him, I made up my mind, I'm going to leave Google. I'm not really sure what I want to do. I'm interested in startups and venture capital, just trying to figure things out. And then a few weeks later after that conversation, I left Google to help get him started. So.
Did he then, now it's like the badass company? Was he describing it the same way? Do you know?
What do you mean?
Well, if you look up 500 startups, McClure talks about it being a badass group.
Oh,
yeah. I see. You didn't do that writing. Yeah.
Oh, I guess if you go to our website, it says something like
that.
Actually, I think someone else did that.
Just wondering.
Badass.
Yeah.
Pretty badass.
Oh, thank you.
Yeah.
So what makes it kind of badass?
So
what was appealing?
Well, my story on 500 Startups is kind of funny, because when I first applied, we actually got rejected.
Yeah.
And Dave McClure, I still remember him kind of telling me I talked too much, and just, that was my first experience with Dave McClure, 500 Startups, and met Christine then too. Really liked the group of people. But I think what 500 Startups did for our company is, first, it really helped us focus on kind of what we needed to really focus on at that time of our company's life cycle. I think if you think about starting a company, there's so many things you can do, right? And it's easy to say, oh, this isn't working, I'm going to move on to this. But if you lose that focus early on, it really is a bad sign. And staying focused, even when it seems like that focus is detracting from 5 other things you can be doing, actually helps make the difference of a success or a failure in the early days of a startup. So the first thing I think 500 Startups did really well is help keep us focused, help us think through what is really important today and what can wait until tomorrow. The second thing I think it did is similar to my time here at Berkeley, is help provide a network of founders, of investors, of people like Christine who've kind of done it all, that we still stay in touch with. I still ping Christine about questions or introductions that she makes usually a day later, if not sooner. So I think that network is the second thing that really helps accelerate the growth of a startup. And then the third thing, obviously, and I think we're going to talk about this later, is Demo Day, which is sort of a platform, like a commencement, a graduation of sorts, where you are in front of some of the most premier venture capitalists and angel investors in all of Silicon Valley, and now it's becoming even more national, where you can present your idea, you can present why your startup should matter. So those three things are, I think I took away with the most value from 500 Startups, and 500 Startups is one of the most premier early stage sort of VC investors and incubators in all the Valley and all the world.
So we'll come back to the demo day also, but I am kind of curious. There are like hundreds of accelerators now globally, but you hear about a handful mostly. What is it? How would you describe 500 Startups? Or when you started it, what was your mission, and how did you want to differentiate yourselves?
I think, so we weren't the first to come up with this model, but I think we were the first to really blow it out in terms of at scale. So there are other firms that have this model of investing in a lot of companies, like First Round Capital is one of them. But our vision was to do that, but like on steroids, I guess. So, and we wanted to be investing in companies that most people aren't really looking at, whether it's the market that they're going after or the type of entrepreneur they are. I think that was always something very core to us. So international companies is a big focus for us, investing in international markets.
So this may be, everybody may know this, but an accelerator is not necessarily a VC.
No, yeah.
So you were one of the first to do both.
Yeah, so I think that was also, from the very beginning, it was kind of a positioning challenge. Early on, people knew that we were a seed fund. They didn't realize we had an accelerator program, and in the very early days, so I think thankfully this was even before NAV was part of the batch, but in the first couple batches, I kind of half joke that we had to beg companies to come be part of our program. There was that very first cohort where I always feel like, as much as we took a chance on them, they took a chance on us too. We were this new program. People were like, what are you guys doing? You're doing a fund and an accelerator. Are you both? You have to decide. So, but we actually think they're very complementary. So we are first and foremost a venture capital fund. But as part of that, deal flow is also through the accelerator. We invest in all those companies as well. We kind of consider them all part of the portfolio.
And do you have to be in the accelerator to be part of the fund?
Well, technically you are, because for any company that goes through the accelerator, we invest in those companies. So, and we don't have a separate fund for the accelerator the way we have, you might, like you mentioned the fund in Turkey. So we do have some regional funds that invest in those markets, but the accelerator, I think that's also, sometimes people get confused. So if you're in the accelerator, you're an investment of ours.
It seems when you look at the companies that you all are investing in, I cannot tell that there is some specific industry, or is there, do you have some guiding principle other than this looks like a good company? Or, what do you ask yourselves?
Right, investment criteria. So, so definitely both in terms of sector that we're interested, as well as team criteria. RealtyShares and NAV is probably a great example of this, but we do look for companies that have a very clear revenue model. So we do tend to invest in a lot of marketplaces, commerce companies, SaaS, software as a service. In terms of verticals, we tend to focus on software and things that can scale quickly. In terms of team criteria, we do like to invest in companies post-launch with some amount of traction. We don't invest pre-launch or idea stage. It's too early for us. But we really try to help our companies with growth, or customer acquisition, getting more customers. We call it distribution. So that's usually the stage at which we like to invest. Definitely, we care a lot about the team at the early stages. Even with all factors looking good, the team is a huge part of that.
Do you think that the people that you work with at 500 Startups, you work with so many startups and entrepreneurs, and earlier I was saying that as we're listening to different people talking, we're trying to think about what are the attributes? What's the mindset that people need to have to be an entrepreneur? Is it different when you're a VC versus being an entrepreneur, or do you think there's certain attributes that you have that you'd be like, I don't want to do a new venture, I just want to do what I'm doing right now, or do you think it helps to have been on both sides?
I think that's a debatable thing. I think what you're asking is, if to be a successful VC, do you have to have started a company? I can kind of see why people think that, but I don't think it's a requirement. On one hand, if you're you had been an entrepreneur, you kind of understand what the founder experience is like. You can relate more to the founder, but that doesn't necessarily make you a good investor per se. And there are plenty of investors who who had never started a company, or even let alone maybe were in an operational role. Fred Wilson is a good example. He had his whole career in venture capital, but he's probably one of the best VCs in the industry. But for me, I definitely had the operational background in terms of working at Google and YouTube, but I didn't start the company, and I wasn't there. I was there pretty early, but not so early that it was just 10 people. Yeah. So for me, I think my startup experience has been actually with 500, building the company. So all the problems, every company has their problems. We're standing up here saying, things are great, our companies are going great, but we probably dealt with putting out tons of fires, earlier in the day. And I just so it's definitely been for me, working with the companies and working on building 500 has been at the same time.
How many companies are you all are part of 500 now?
So our portfolio is at this point growing pretty quickly, but it's past 1,200.
Wow.
Yeah.
So being one of 1,200.
1,200 loved companies.
Yes. I'm just wondering if you can kind of walk us through, it does sound pretty incredible that you're pretty driven. You took all the Haas classes while you're in law school also, and working in a law firm is, you can't be very duddy when you're there. You have certain goals. What was it? Walk us through how you started RealtyShares, how the idea came about, and really what you did to do that, and a little bit about, talk to us more about your failure, and how you were resilient enough to go back again.
I've never failed. I'm fail-proof now. So we'll take you through why the company started in the first place. This was 2012, 2013. I'm a real estate. I've been in the real estate market for about a decade as an attorney, as a broker, as an investor, and was looking to buy real estate. A lot of opportunity. Just came out of one of the worst recessions of all time. Values were at an all-time low, so great time to buy real estate. Identified plenty of properties that I thought were a good value. Properties I had looked at when I was a broker, so I had the experience. I thought I had the experience to buy these. The most difficult part about doing real estate during that time was finding capital. So whether it's debt capital from a bank, which was slow, grueling, insanely hard, or equity capital from friends and family or other investors, it just was the single most difficult part about doing real estate deals in that time frame, and still so, but to a lesser extent. At the same time, I was at the law firm and had plenty of colleagues who were, in their late 20s, early 30s, looking to diversify their holdings. They were heavily invested in stocks and bonds. There was a lot of volatility, would have loved to put money into the real estate market, but really didn't know where to go to get started. How do we access these deals? Can we put 10K? Can we put 5,000? And the answer was no. Unless you want to go buy an asset on your own and kind of go through the same hell I just went through, or invest through a private partnership, which will be difficult for you to find, and put up 100, 200K, it's really hard for you to get that access. So just realize that there's this market opportunity to provide more efficiency to both stakeholders, both to investors looking to put money into real estate and to companies and borrowers looking to raise capital outside of what was a very painful existing process. So launched the company off that sort of experience, off that premise, and it's proven to be very true in terms of the appetite on both sides.
So it was you and the gentleman that you met at Haas, the two of you. Was it just the two of you in a room, or how did you start to scale up with the company?
In the beginning, it was just the two of us in my living room, his living room, just thinking through this idea. Like, is this doable? Is there teeth to this? We both felt pretty confident from day one because we had both lived the inefficiencies that we were trying to rectify, that there was an appetite. But then we quickly started to realize how much regulation and restrictions there were from both the federal and state governments to sort of launch this sort of platform and idea. So there were a lot of long nights and weekends while we were both working full-time jobs, him in real estate private equity, me in real estate law, jobs that require like 12 hours, if not more, a day, of just thinking through the idea before we actually launched our first investment on the platform. So
forgive me if you mentioned this, but what are the legislative roadblocks, and how What's happening lately with those legislative roadblocks?
I'm kind of scared that you asked if anyone wants to be a lawyer. No one raised their hand. And now you're asking me to talk about regulation, but I'll still do it for you.
Legislation, just a roadblock, because it's a big roadblock for what you all want to do.
So, I mean, no matter what marketplace you're launching, you're going to have to deal with some level of government interaction. Airbnb and Uber deal with local government all the time. With us, it's not less local, more state and federal. So many people here probably have heard of Kickstarter, crowdfunding platform that lets you sort of contribute towards projects or films or products. The crowdfunding, the birth of crowdfunding really came through platforms like Kickstarter and Indiegogo, which was founded by Cal alum. So what we do is similar. We crowdfund real estate. The big difference between what we do and what a Kickstarter does is, in exchange for your contribution, your investment, you actually get a stake in a property. So you are putting that money up with expectations that you'll make a return. As soon as you do that, you're regulated by the Securities and Exchange Commission because you've sold a security to an investor. So that's the main regulation we deal with, and it comes with a lot of sub-regulations that could take an entire hour to talk about.
So could we all be investors?
If you're not accredited today, meaning if you don't have an income of $200,000 a year or a net worth of $1 million, you can't.
So that just knocks out only half of us.
But one of the reasons we started RealtyShares, and the thing that excited us about it, was the passage of this new legislation called the Jobs Act, passed into law in 2012. And it gives this promise that hasn't yet gone into effect of anybody. Because the fact of the matter is we started RealtyShares with the mission, the vision that anyone should be able to invest in real estate, not just rich people, not just institutional investors, anybody. Just like anyone could buy a share of stock of an Apple or Google or even a stock that you probably shouldn't be buying shares in. So our mission is still to expand access to everybody in this room, not just 50% of you. And that's something we haven't yet realized, but we'll hope to do in the future.
So you had this idea, you thought it all through. How did you first start thinking about what was the next step? You had the platform, maybe just in your heads, I don't know. What was the next step? Did you need money? Did you need connections? So, for a while we bootstrapped the company. For the first almost a year, or 8 months, we were purely bootstrapped. We both contributed, $5,000 each to a bank account. Watched every penny go in and out of that bank account because it was a lot of money to us. And it really was, the first few months were just thinking through the problem. And then we realized, look, enough thinking, we just have to do. We have to show that this can work, that there is an appetite, and this was probably one of the reasons why we didn't make it through 500 startups the first time around and Christine made this clear, is they want to invest in companies that have some level of traction. And the first time we applied, it was just really an idea. It was just a concept. So, we sort of told ourselves, look, we just need to launch something. We just need to launch a product. We've thought about this for the last 3 months. Let's just do it. So, and it didn't take a lot of capital. The beauty of starting a company today is it doesn't take a lot of capital. The infrastructure costs, the most expensive part of starting a company is people, right? The infrastructure costs are pretty negligible. So we launched our first 2 properties that we were trying to crowdfund in late summer of 2013, and we saw them fund. And it was pretty crazy because it was just the 2 of us. There were investors that had found out about us through some blogging and some PR. These sort of borrowers that are looking to raise capital. I was calling investors during lunch, when I was at the law firm, and I was calling them, and they're like, "Well, aren't you the CEO of the company? Why are you calling me?" I'm like, "Oh yeah, all my people are off on lunch today, so I'm making the direct calls." So you have to sort of be bigger than your company is at every stage, because talking to customers, selling customers is a very important part of being at an early company. So it was very scrappy in the early days, and then we went through the 500 Startups Accelerator starting in October of 2013, and that's really... The 2 of you that went through it, or?
It was me, one of our engineers, and actually at that time, my original co-founder actually left because he's like, I can't live off cup of noodles, so I'm actually going to stay in real estate private equity. And so a third party that was kind of focused on more on biz dev came along for the ride. And it was a great ride.
It's still a great ride.
Well, the ride's over, but...
Wait, why do you say that?
Well, 500 startups I meant.
Sorry. Oh, okay, thank you. All right,
Not the company, that ride's still
I'm like,
going,
what do you mean?
Yeah.
So first demo, the first time you applied didn't go that well. Second time it went really well. And then at the end of your, is it 3 months? Or
I felt like I was there for 6 months, but maybe it was like
but how
4
much
months.
is it really?
I think yours.
4 months?
Because you started in October, so it went through, it was a little longer because the holidays, maybe it was like 4 months.
It's 4 months.
So I think, is it in the next week or two, you have demo day? And
yeah, Halloween, not Halloween, but the day before Halloween, so it's going to be fun.
That's going to be fun, yeah.
So how many demo days does 500 Startups have a year?
We do 4 a year because we run 4 batches a year.
Okay.
Yeah.
So what is it from your perspective, and then I'll ask Nav from his perspective. From your perspective, what is demo day? And what does it look like for you, and how do you all prepare for it, and what's the importance of it?
So demo day is sort of the closing of the batch for each accelerator batch. What it actually is a one-day event where the companies will come up. They'll do like a 3-minute pitch of the company. It's something that they've probably practiced for weeks prior. And the format is pretty standard. It's roughly 30 companies a batch, and they all come up and pitch. And but the goal of it is really to help them get exposure to more investors. There's sometimes a misconception that demo day is like the end-all be-all of the company, or it's the most important thing. It's actually probably pretty insignificant in the grand scheme of building a company. But for us, we see it as really a way to kind of bring closure to the program, but also it's sort of like almost like a coming out of the program. So introducing these companies to a huge network of investors. What we tell the companies is, obviously it's important. It's something you should really use as a tool. But not to focus too much on it at the don't sacrifice your company just to prepare for demo day. Just think of it as a tool. It's a great forcing function. If they happen to be talking with investors and they're raising money, you can say, well, come demo day, the valuation of our company is probably going to increase, so you should try to come in now. Or, I'll meet you at demo day. I'm going to be presenting. Why don't we set up a meeting? The idea is not that they're going to get checks written to them on demo day and they raise their entire round on demo day. It's really to get that first meeting, get those connections. I don't know, Nav can maybe say what his experience was specifically for demo day. It varies depending on the company, but many companies do get a lot of meetings. For some, it's a little bit less fruitful, but it's really, we want to at least provide that as like a tool for the companies.
Is there a difference between the audience from demo day like 3 years ago versus the audience today?
Yeah, it's definitely.
What is the difference?
Hopefully there's been kind of a trajectory from, as 500 has grown, because the first demo day was pretty bad. Like TechCrunch didn't show up, and it was in our office, and so it was pretty weak. But now we do it at the Computer History Museum, which is a pretty big venue in Mountain View. If any of you guys have been there, the room is 400, 500 people, so it's pretty packed. And the audience is largely investors, so it's a range of angels, smaller funds to more the Series A funds. Good representation of investors who are international and not, and of course there's press, corporate strategics.
So
with that
pressure.
To be completely honest, demo day for me started on day one. The day I arrived at 500 Startups, when Dave McClure lined us all up, told us to give our elevator pitch, and then told us why it sucked. Right? That was the start of demo day. And the reason I say that is, and it's what Christine said, demo day in itself is a day that you get in front of a group full of 400 investors and you pitch your company. But what you're doing with that pitch is everything you've worked on the 4 months prior, from the pitching to the customer acquisition to the potential money you've already raised before you walk into that auditorium and stare at 400 faces. And sort of petrified. So demo day is really that culmination, but if you haven't focused on the company, if you haven't raised some money before demo day, if you don't have traction you can sell to those investors, a way to differentiate yourself from the 30 other companies, demo day really is not as cracked up as it should be. So for us, it really was the entire experience was demo day, because it was really, you're constantly pitching to investors, you're constantly trying to get customers, you're constantly refining your pitch, and that's what you're ultimately displaying at demo day.
So it's interesting because having worked with entrepreneurs for a couple of years now and listened to different people talk about the ideas being interesting, but people often invest in the people. And I'm wondering what you think about that, how you think about that, and what you look for. I mean, it's got to be some kind of a combination, but I am interested in what you look for in terms of the people.
Yeah, so in terms of people, so functionally we do tend to prefer that the team have some good combination of technical talent and at least domain expertise and kind of really understanding customer acquisition and growth. Sometimes that ends up being 2 different people or 3 people. Sometimes we do invest in single founders. It's not often, but we do. But we look for that, kind of the skills, but and that they are passionate about the problem. I think the other things are, a lot of it kind of comes off in the interaction we have with the entrepreneur. So, saying that someone seems to have a lot of hustle or seems really passionate about what they're doing, it's pretty subjective. Sometimes you could catch me on a bad day and I'll be like, you suck, or like this is a horrible company. But usually that comes through with the entrepreneur. Like sometimes it's how they got in front of us or who had referred them. With Nav. So the first time they interviewed, I actually really liked them, but it was just really I think it was, I don't know if you guys were pre-launch or you just hadn't launched yet.
Someone found out I was a lawyer and they rejected me.
Maybe. But yeah, I think I wrote him the rejection email and I told him why. And then he was like, oh, well, that's disappointing. And so usually when some companies will come back and apply again, some won't. So I wasn't really sure. But they came back and, they went through it again. And
how long later did you reapply?
Like what, 4 months or
something? It wasn't too long. It was just the next batch. And they had made progress. So I thought, oh, wow, okay. Well then, we should bring them in. Because it wasn't like that nothing had happened. Sometimes companies come back and there's been like no change. So, I'll say, for Nav specifically, what I really liked was he had definitely, there was no question about the domain expertise. Like he was the target customer at one point, and he really understood kind of the intricacies of the space with real estate, having been a lawyer. So that, there was some kind of de-risking in my mind that it wasn't like someone who had no idea about real estate and investing in real estate. But I think, it was just like, it was clear that he was very sharp. The fact that he was going to leave kind of his, cushy, probably well-paid job as a lawyer to go and start this company was a big sign. I can't remember if he had already left the company or if he was doing it on the side. I think it was, he'd already left, which is, speaks a lot to that they're determined to do it. In some cases, we meet companies where the founders are still in their day jobs and doing this and saying, well, if we get into 500 or if you invest, then we'll leave our jobs. And it's not the best signal. It's like, if you're going to be doing a company, you should just be all in. So yeah.
So I'm curious to know, I mean, in my mind, I have this kind of sweatshop where everybody's there at 500 startups until 4 o'clock in the morning, kind of like a law firm, actually. But do you interact with co-founders? And I don't mean your co-founders, but co-founders from the other companies, or what did it look like? Yeah,
so 500 now has a San Francisco location, but when we were in the incubator, the Mountain View was the main Bay Area sort of location. It's a really cool building. It's a really cool space. It's very collaborative, open floor plan. There's a ping pong table, which is cool. And so you are sitting next to various companies, and companies that have very different products, different backgrounds, different founders that just bring things that you don't bring, you bring things they don't bring. So part of the network I was talking about is really meet these founders, these people that can help you later on, introduce you to a VC, introduce you to a potential employee for the company, and then vice versa. So it is encouraged that you collaborate, and everything that 500 does, from the sort of the fireside chats to the events to the happy hours to just putting people right next to each other, is meant to instill that collaboration within the group. For me, it was kind of a big culture shock because I had my own office as an attorney and a secretary, and going from that to just like 4 desks where it was the 3 of us and then other founders, initially was like, whoa, like there's this is kind of going to be interesting. But now, I mean, I can't go back to an office ever in my life. And the entire RealtyShares office is just desks, people right next to each other. And cubes and offices to me are just like, never.
So it seems like you all have grown quite a bit in the past year and a half. And then when I look at the leadership team, unlike other companies, everybody is from a different, right now I'm looking at not just business experience, but also quickly, where everybody went to college. And you'd think, everybody is from all over the place. So how did you start to gather this greater team around you? What were you looking for besides the skills?
Yeah, so cultural fit's very, very important to me. Having people that first can buy into the mission and see that, look, this is an opportunity to really provide true value to an area where value today is existing. So people that actually can buy into that mission, that aren't jerks, aren't people that just are going to sort of create personality rifts between the various people. Because, like I said, you're sitting right next to this person. Second is, there's no essential criteria that they have to go to this school or they have to graduate with this degree. It's really, one thing that really helps is if they're referred from someone I trust, similar to when 500 Startups is accepting candidates, is how did they come to RealtyShares? Did they come directly through a job listing, or were they introduced to someone who I actually think is a great founder, a great VC, or a great mentor? So that really does help, especially in the early days when you're trying to gather a very elite group of people that buy into the mission and that are really creating the culture of the company. That in that initial year, 2 years of the company, every person you hire has to have the founder mindset, and if they don't, that's kind of what I think ends up resulting in a lot of companies having cultural issues or failing early on, even if they have a pretty good product.
So I'm kind of moving into the last part, the insights, and we do have questions from different people, and so I thought the name of the person who asked this, but once you accomplish a fairly large goal, and it's in building companies, it's a series of large goals, but the question was, what's your reflection process like? I know that also you're bringing out a new product right now as well, but what is, for both of you, once you hit a certain goal, what do you do? What is your reflection process like, or is it there?
So I can go first. So I mean, there's always a reflection process, to be honest, daily, on how that day went, how that week went. But what we do is we have quarterly goals that we establish for the company, and the goals are usually based on how many deals we originate through the platform, as well as the performance of the deals that have been originated. So we do two things at the end of each quarter, and sometimes it's sooner because otherwise people start getting burnt out, is we celebrate, right? Whether it was a fantastic quarter or a good quarter, and sometimes even a not so good quarter, we celebrate because even if the results weren't as phenomenal as we wanted them to be, and oftentimes they are that phenomenal, we still learned a ton that quarter. We still learned a ton about ourselves, about the company, about the customer, about what worked, about what didn't work. So we do something where the entire team gets together. We usually go drink, maybe bowl, maybe go to a Giants game. It depends on what everyone's feeling and what the weather is like outside. But we celebrate. We celebrate a success. We celebrate a learning. The second thing we do is an all-hands-on meeting. So usually I lead that meeting, and now we have about 26 people. Before it was like 10 people, and we talk about like what worked, what didn't work, what we learned. Because when we're out getting drunk, or drinking, it's not the best time to reflect on what we learned, right? People just want to have fun and let loose. But that all hands-on meeting is really to get everyone together and figure out like where we went wrong, where we went right, what we should be proud of. Sometimes there's drinking there too, but we're not alcoholics. So it's really, that's the time when we all reflect upon our accomplishments and our failures and think how the next quarter we're going to learn from those and start developing something that can rectify some of the mistakes we made in the previous quarter.
Yeah, it's an interesting question because I think it's something, taking time to reflect and look at what we've achieved and whatnot, it's something that we're trying to do a better job at. I think our culture is generally to move very fast and just kind of execute, and we, as the team has now grown to almost 100 people at this point, and not just 100 people, but 100 people across like several different countries. So we do have the challenge of how do we stay connected as a global team. So we've done a lot in the last year that are what I would call rituals. And so they seem kind of process and kind of mundane, but they actually make a huge difference in terms of maintaining the culture. So, Nav talked about doing all hands meetings, every quarter celebrating wins and understanding what went wrong. We've been doing what we call OKRs, which stands for objectives and key results. But basically at the beginning of every quarter, drafting up very short, like for everybody at the individual level all the way to the company, like what are the goals we want to achieve? And then throughout the quarter, kind of looking back and seeing, how are we tracking against this? And at the end of the quarter, kind of evaluating, how did we do that quarter? And it's important that everybody has a sense of like how they fit into the bigger company mission. So it's something we've done for a couple quarters, just trying to improve. We also do retreats twice a year. One in January and one in June, where the entire company comes in from everywhere. They all fly in to some location. Usually it's here, but I think we might be going to some I don't know. I think we're going to Mexico, which scares me a little bit just because of the cost. But but I think we do have a lot of our team members are international anyway, so people are flying in. But we do try to get the entire team together at least twice a year to do this type of 2-3 day reflection on like what we could do better. The other thing is our company is like constantly connected. Our team, the nature of what we do, a lot of people travel a lot. We use Slack. I'm not sure if people are familiar with Slack, but we're just constantly talking to each other. It's just more how do we keep that up in terms of morale and
is Slack just internal instant message or what is Slack?
Yeah, it's kind of a communication tool typically for businesses. So it's usually people, like I tend to use it on my phone, but there's a mobile app, native app, a desktop app. You can use it on the web, but I don't know if anyone use Slack? Oh, okay, wow. Maybe, I guess, do you guys use it for classroom or for clubs or? Clubs. Oh, okay, wow, did not know that. Okay, great use case. But yeah, it's definitely very popular within companies. But I guess I've seen people use it for community purposes. Like I'm part of this female founders community where it's just a bunch of random people, but and I guess for student groups too.
So if you're thinking about, I think a student had asked, like, what's the best advice that somebody ever gave you? But is there any advice that you have for students here, either based on your own learnings or advice that you've gotten from others that they should be thinking about? And students in this room are an incredible mix of all different areas of the university, undergrad, grad, and even postdoc, and lifelong learners as well. So there's the other question, or if you don't want to answer that, if you weren't doing what you're doing now, what would you be doing?
I'm happy to answer like the advice question or kind of lessons learned question. I mean, I think the biggest thing for me, and this helped me a lot, was kind of thinking through, what like sort of the educational system tries to do, right? It tries to tell you this is kind of this is what your career path should be. Right? For me, it was law. You just graduated, you're a lawyer, go be a lawyer. But I think the interesting thing now is, and I noticed this when I was at the law firm, because the partners got together and said, we have more churn now than we've ever had in our history, right? There's so many people leaving. What are we doing wrong? Is the Friday lunches just not as good anymore? Is the water just like too hot or too cold? And they were just trying to justify it through so many different things that they thought they were doing. But I think it's really the mentality of the newer generation. I think I consider myself part of that one. But of not wanting to be pigeonholed into one occupation and one job, maybe being more entrepreneurial, thinking about what they can do, what they can build, because they don't want to be stuck in that same sort of occupation, that same job for 10, 20 years like our predecessors did. So no matter what you graduate with, I don't care if it's, engineering, law, business, underwater basket weaving, it doesn't matter. Like you can do whatever. I mean, you have an idea, you have something you think could be a company, go do it.
Yeah, that's funny. My mom is of that generation. She still works at Intel, but she's been there for like 30 years. But that generation is like, they stay loyal to that one company. And I'm trying to think. So in terms of advice, I think one thing that I will share with you that has definitely had a big impact on me when I think about advice is kind of I don't know what the exact wording is, but something like, you don't get what you deserve in life. Everyone thinks they deserve something or they're entitled to something, but you don't get what you deserve, you get what you negotiate. And what I mean by that is, you might think, oh, I deserve to get a good grade on that, paper, or I should have gotten that raise, I should have gotten that promotion, but that other, other guy got it, and that's not fair. So everything seems unfair in life, but it's really up to you to, I use the term negotiate, but it's really up to you to kind of ignore the no's and everything working against you and make it happen. This has definitely been the case for me in my career. Like the first couple times I applied to Google, I think I got rejected. I think I applied right out of school and I got rejected, and then that was a really bad time in the economy. It was the first big .com burst. And then I worked somewhere else for a little while, and then I joined Google in 2003. But yeah, and when I just think about being, I'm sure all of you have been rejected at some point for something. It's just like you can't let that hold you back. Sometimes it's a matter of just trying again, or it's going to whoever and trying to hustle your way in. So it's really a combination of you get what you negotiate plus don't take no for an answer. Another even earlier funny story is when I was at Cal, I worked at the computing centers, and I think the first time I applied for a job there as a freshman or sophomore, I got rejected. And then I applied again, and I was like kind of on the wait list or whatever that means, sort of like, well, if we don't have enough staff, maybe we'll bring you in. And then I guess they needed someone, and then I got stuck at Clark Kerr way far away. So I thought, oh, okay, I guess it's kind of far, but I'll do it. And then I worked there for a few years, and then I was my last year as a senior, I ended up leading one of the staff. So it's the reject of the computing center staff is now running one of the computing centers. So it's just kind of a good thing to think about as you guys are students all the way to figuring out what you want to do. If any of you are thinking about starting a company at some point or want to be an entrepreneur, you have to be prepared for that. You're going to get a ton of no's, and it's one of the hardest things you'll ever do. I'm sure Nav has a lot of hidden, no gray hairs I don't see.
I do, I definitely do. They're just not visible right now.
Oh, they're invisible, okay. But yeah, I'm sure he has a lot of kind of war stories from founding a company, just all things you can't really even imagine how tough it is. And same for myself over the years with 500. But part of it is just you have to really kind of hustle through.
That's great. Yeah. I wanted to open it up to you all for questions, and I'm hoping we've got somebody with mics. Does somebody have a mic? They're on the stage. Yes, they are. Do I have Nickel by chance here? Do you want to go ahead? Would you do me a favor and just introduce yourself and what you're studying?
Most definitely. My name is Tyree Kayshawn, studying entrepreneurship and technology. That's my concentration. And I'm curious if students here within this room will be able to attend the demo day and just kind of, get a feel of, what that situation is like, so we can prepare ourselves for not just applying to your company, but other accelerators as well.
So we do limit it just to people who are going to, unless you happen to be an investor and want to write checks to these companies. But we do try to keep the audience very qualified in terms of people who will invest in these companies, just so it's a good experience for them. The one thing we do that is probably different from a lot of accelerators is we do live stream our demo days. So if you keep an eye out on 500 Startups on our Twitter handle or on the website, but it's October 30th, we will live stream it. So you can at least see the pitches. And we actually, if you go to our YouTube channel, we posted pitches from the last demo day, so you can see what it's like.
Thank you.
Sure.
Have it back.
Hello. Can you
go ahead?
Can you hear me? Hi. I was wondering, kind of in the beginning of your startup, how did you prioritize or percentage coders, biz dev, and advertising? How did you balance those, and which did you prioritize?
So Coders are the hardest, to be honest. It's really hard to find them and hire them. So they were always a priority, never the easiest. So early days for us, it was less about can we build the best technology out there. It was really like, are there investors that are going to use an online platform to invest, and are there borrowers that are going to raise capital online? So a lot of it was very sales, biz dev heavy, customer experience heavy. We had a pretty sort of lean website in terms of like what we had built, because all we needed was a place where two people can transact, and that had already been done before. Now, as our company evolves, a lot of our scale and ability to sort of grow, and our first in 2014 we did about 24 million through the platform and transactions. This year we've already done close to 70 million, or more than 70 million actually. So we're growing quickly, and to sort of scale and continue to scale, we need to put a big emphasis on technology. So we are prioritizing technology and product a lot more than we were in the first 6 months of the company's life, and marketing as well. As you grow, you need to acquire more customers to keep growing. So marketing is a very strong focus of ours as well. So it changes during the life cycle of a company, I think.
Hello. Hi. I have 2 questions. The first one's
just giving a little bit who you are.
Oh yeah, my name is Vincent. I'm doing econ. So my question is, I heard that in order to do VC, you should probably have like operational experience, right? But at the same time, so it makes sense for former entrepreneurs, people who have been in the industry for a while, and also like in some way consultants too. But for some reason, bankers also, it's pretty easy for them to get into like all sectors of VC, from like early stage, late stage to growth equity. Is there a reason why venture capital, like VC firms, tend to like bankers as well?
I just want to we have a group of MTI students that need to get to another class, is my understanding. So I just wanted to give you all the green light to go, and quietly.
So you're asking about
Yeah.
why a lot of
I'm just a little bit confused because it seems like they're not the typical VC profile.
I mean, traditionally venture capital, a lot of people who are in venture capital, a lot of them have tended to come from the finance industry, whether it's banking or private equity or whatnot. So, the good and the bad is that it has also been traditionally very kind of this old boys club and very network based. It's not, most VCs don't post job postings that they're hiring a partner. They recruit people they know. So that's probably why. There's obviously exceptions, especially in Silicon Valley, where there are a lot of operators who are starting funds or people who don't come from the finance industry. Certainly none of us have worked in venture capital elsewhere, but for a lot of the other funds that are out there, they probably came from a banking background or finance. So.
I have one really quick question too, but have you had any experience with advising teams that are really big, like a team of 6 or 5 in a startup?
Yeah, usually when we invest, the team could be anywhere from just the founders to like 5 or 6. I think in Nav's
5 or 6 co-founders.
5 co-founders. Yeah. Oh, that's a lot. That's usually, I kind of wonder about that. If it's a team of 5 where it's like 2 co-founders and the others are employees, that happens. If there are 5, 6 co-founders, I do kind of wonder how decisions get made, who's the CEO, what does the cap table look like, but so it depends. I do think that's actually, I've seen that a lot in markets outside the US for some reason. Like we've invested in a couple companies in Korea where they're like 5 co-founders, which I don't understand, but yeah.
Thanks.
Sure.
How about if we do this as the last question, and then if y'all are okay, I know that people will come up and ask questions. Is that okay for you all? And can you all hand this back? Pass it back right behind you, over your right shoulder there.
Hello. Is this on? Oh, hello. My question is, whenever I watch Shark Tank, like Mark Cuban always says...
I'm sorry, would you just say who you are and background?
Hi, I'm John. I'm a freshman, I'm pre-Haas. And my question is, like, whenever I watch Shark Tank, Mark Cuban always says, could I create a team or a product like this with the amount of money that you're asking for. So how do you create a company and a business that when you go to an investor, you don't have that worry that they could just create that company with the amount of money that they have and make it their whole, like own all the equity to it? I'm
not sure if well.
So my question is, how do you make sure that your product is unique enough and developed enough to go to an investor? I think one thing that's first and foremost important is like you have to know what you're building and you have to know who your target customer is. I think that's usually where most companies get into problems, where they're building a product or they're building something for an audience that they don't really know who they're building for and they don't really know what problem they're solving. So it sort of kind of makes it difficult to focus. And if you go to pitch investors, they poke holes in that and say like, why would I invest in this? So I think even before you think about how do I make sure my business is unique enough, think about what is the problem that you're solving, and do you really know who your customer is? Or if you have some at least hypothesis of who your customer is, how are you actively testing that out and building a product that's actually solving a problem for them? Nav was very clear that he was building kind of a marketplace for real estate investors who couldn't get into real estate deals. Like that's a very clear customer segment. When we would meet every week during the batch, it was very clear the type of customers he was trying to acquire, both on the supply and demand side, and just being very focused. So I think if you're doing that and you really know who you're targeting and constantly talking to these potential customers and really understanding them, that'll help you to really build a compelling product and business. Mark Cuban, I guess it depends on the company, but that's probably just a lot of VC talk for like, I don't like this. But there's questions about like, what are you building? Like, is it really defensible? Is it unique? Who is this for? Like, but I think if you just really focus on who's the customer, what's the problem, then that makes a huge difference. Thank you.
Nav and Christine, I want to thank you both for taking the time during this busy time of year, and thanks for staying after a little bit also.